What's up everyone, Brad here from the Money Dad channel. In this video I'm going to go over all of the big tech stock charts and the patterns playing out on those charts, some of which we've been tracking here on this channel for a while now. I'm going to talk about Facebook, Apple, Microsoft, Tesla, Amazon, Netflix, and Google. But before I do that, I'd like to say two quick things. First, I'm not a financial advisor. This video is for entertainment purposes only, so don't sue me, bro. And second, the summary of this video will be at the end if you want to skip to that or any particular stock if you're interested by checking the chapter timestamps in the description below. All I ask is that you hit those like and subscribe buttons to help me and my family out by growing this YouTube channel. That also gives you quicker access to my videos, which I hope you'll find have valuable information in them for stock market trading and investing, for entertainment purposes only, of course. All right, let's jump into that first stock chart. So I got TradingView pulled up. We're going to move on over to Facebook. That was the first one on the list, right? So we're kind of doing the FANG type stocks, right? The big tech stocks, but I've got my own list. I call it FAMTANG, F-A-M-T-A-N-G, and it's listed right here over on the right side of my screen. F-A-M-T-A-N-G, FAMTANG. It's like my version of FANG stocks. All right, anyway, so I got Facebook pulled up. I'm gonna zoom out a little bit now that you kind of see what's going on here, just because there's a bigger stock chart pattern playing out here and we need to zoom out to be able to see it. So there was this consolidation phase going on Facebook. I made a video about it, I think about a week ago, and I said, you know, we need to see if we're going to break out above it or below it. And typically these consolidation phases will break out in the direction that of whatever trend was going on before the consolidation phase. So you can see we were trending up before, right? We've got this bull trend coming up into the consolidation phase. So this was more likely to break out to the upside, but that didn't happen. We saw a breakout to the downside. So that's obviously not good for this stock, and I think there might be a little bit more downside to go actually, because the width of this channel was pretty big. So if we measure that, we get about $67 of width at the first touch point here. So if we measure from this breakdown, actually you measure from where the bear trend started. So if you measure from right here, you bring it down $67. You come all the way down to that 222 range. So I think that might be the downside risk here on Facebook. I don't like it. I don't want to be invested long term in Facebook. I think I do have like a couple shares in my Robinhood portfolio, but not any kind of huge position in this. And that's a long-term play anyway, and this chart is more for short-term, medium-term swings. So that's what I got for Facebook. I see some downward risk. I don't like it. We've done some technical damage here, and it's not looking good for the bulls for Facebook in my opinion. Okay, let's move on to Apple. So Apple I made a video on a couple of days ago. I see a cup and handle here, which is extremely bullish for this stock. You can see I have a $170 price target on Apple if we can finish out this handle of this cup and pattern. We made the cup, pretty nice. We've made half of the handle. Now we need to come up and break above the lid of the cup. The handle needs to finish forming. Once we break above the lid of that cup, I see $170 as the price target, and that is measured by whatever the depth of the cup is. You started at the bottom of the handle and set that projection. Okay, so that's what I see for Apple. Pretty bullish on it. That said, we do need to get above that lid before we can enter a trade on this one, or at least enter a trade with a lot more confidence anyway. So I'm not entering a trade on this one until we get above that lid. All right, guys, that's what I've got for Apple. Let's move on to Microsoft. Okay, so Microsoft has this consolidation phase going on, and a lot of these big tech stocks have this consolidation phase going on as well. We saw it with Facebook, and Facebook broke down underneath the consolidation phase, and I think we'll have another one coming up on Google and maybe Netflix. I can't remember, but we'll get there. Anyway, there's this consolidation phase going on. It's coming from a bull trend. So like I said with Facebook, these consolidation phases typically continue whatever the trend was before the consolidation phase, right? So we had a bull trend before the consolidation phase. So this should break to the upside eventually. Don't know when it's going to break out, but we want to see a clear breakout above this resistance line, right? So I don't know when that's going to be, but the channel is closing, so it's going to be soon, right? This is a pretty steep support level down here, so we don't have a whole lot of time left on this channel, consolidation channel, so we're going to see a move soon. I don't know which way it's going to be, but if I had to put money on it, I would say to the upside, because this is continuing that bull trend from before the consolidation phase, right? So once we get above that resistance line, a couple of candlesticks close above the resistance. By the way, I'm on the daily candlesticks, so a couple of days of closing above that resistance, that would be a good time to enter. And then I would be long on Microsoft for a good chunk of upside. We could measure it real quick, see, get the height of this consolidation phase is about $34.50, so we would start that $34.50 at the beginning of the bull trend. So if we think this is the beginning of our bull trend right here, we would measure $34.50 of upside right here, and we would get a $249 price target to the upside for Microsoft. So pretty good upside on Microsoft right now. That's 16% from where we're at right now. However, I wouldn't be entering a trade until we break above this resistance line and have a couple of candlesticks close above it. All right, so that's what I got from Microsoft. Tentatively bullish on that one. Okay, guys, let's head over to Tesla. So Tesla is kind of hard to read. I haven't done a video on Tesla in a while because it's just gone straight up. So there's no real stock chart patterns on this one, but what I can say is this thing has been going straight up for so long that it's going to need a breather at some point, right? I mean, if we look back on its stock chart history, you can see after these huge run-ups, it just needs a breather every once in a while. You get this huge run-up and then a breather. You get this huge run-up and then a breather. These are consolidation phases. A huge run-up, another breather. The market just needs time to breathe, time to consolidate, time for those buyers to get more money, or time for more buyers to become interested in this stock. I mean, this is a massive run-up, and we had a little bit. This isn't even a breather. This was, this isn't even a consolidation phase right here. This was chopping up still significantly up, right? It's chopping, but it's, you know, it's going up while it's chopping. So I wouldn't even call that a breather. Maybe that's a breather for Tesla, but not for a regular stock. This is more like a breather, right? This is a consolidation phase, just like we were looking at on Microsoft right here. See this massive consolidation phase right here? That is the same thing that we're looking at right here in the time frame for Tesla. It's just we don't have anything like that recently on Tesla. We need a breather of some kind. So I'm going to say for Tesla, in the short to medium term, I'm pretty neutral on Tesla, just because I think we need to see some sideways action. And then long term, I will be bullish again on Tesla. Okay, so that's what I've got for Tesla. I think we need to chop sideways a little bit, let the buyers and sellers consolidate. Maybe this 850 price level ends up being that spot where we end up consolidating. Maybe we stick to like the 800 to 850 range. I have no idea. It's a total guess, but I would not be surprised if we start chopping sideways here. By the way, if you guys like what you're seeing in this video, hit that like button. And if you're not a subscriber yet, hit the subscribe button. I do this kind of stuff almost every single day. Stock chart pattern analysis. I try to make predictions on stock charts based on the patterns that I see in the stock charts, and we've done pretty well with it so far. Okay, let's move on to Amazon. Okay, so I made a video on Amazon recently as well. I see this, like I said, with all of these other big tech stocks, this consolidation phase, but this one is more like a bull pennant. I see a bull pennant playing out here, so there is a pretty good, or there's a bigger projection anyway on this one, and I think there is a big projection of $5,000 potential for 2021, and that's based on making this flagpole all the way from the March pandemic lows. I did retrace that flagpole back to about right here recently, and we have a smaller projection now of the $4,300 range, which is still, I mean, that's still a ton of money for Amazon, right? I mean, we're trading in that $3,100 range. So a lot of upside potential, but we need to break out above this consolidation phase to make that happen. Now we have 3 touch points on the top and 3 touch points on the bottom. So that is a legit consolidation phase. I mean, this is as close to a perfect bull pennant as we can get. Really good support right here, really good resistance right here. We need to see which way it's going to break out. And like I was saying with the other stocks, since this is continuing a bull trend, we should expect it to break out to the upside. That said, it's obviously no guarantee that that's going to happen. It could absolutely break down below the support. It's just more likely that it's going to break out to the upside, okay? So once we break out above that support right there, we get a couple of candlesticks to close above that support, I will be bullish and long on Amazon for almost all of 2021. This is a very big stock chart pattern, you know, so I would see at least $4,300 on this stock, and that would play out through May. Potentially even $5,000 on this stock, and that would play out through August. Okay, so very big stock chart pattern on Amazon, pretty bullish on it, but we need to break out above that resistance to make it happen. Okay, that's what I got for Amazon. Let's move on to Netflix. So I will just start this one by saying I'm not a big fan of Netflix at all. I don't like that they are only in the streaming service and that's it. I would much rather be in Disney if I was going to be in something like that, where they have Disney Plus as their streaming service, which is blowing up. They have their parks, they have their cruise lines, they have the movies, they've got everything going for them, and Netflix is a streaming service. So I don't really like Netflix from a fundamental or I guess product standpoint. But I will try to stick to the technicals here because that's what this channel is mostly about. But there's just not a whole lot going on here from a technical standpoint. It's really hard to glean anything from this chart. I mean, we are chopping almost perfectly sideways, maybe just slightly bearish. We did have a bull run up into it, but this has been chopping sideways for so long now. I mean, look, we've been chopping sideways since July. And we have not been able to break above this trend line. We haven't broken below this support. It's just kind of in this lull period. You know, I think Disney and the other streaming services that are doing well may have something to do with this. I think people are starting to realize, look, Netflix is not the name in the game anymore for watching television online. There are other options, right? There's Amazon and there's Hulu and there's Disney Plus and there's all of these other streaming apps now. You know, Netflix had this meteoric rise over the last couple of years because they were the name in the game. And now they're not. You know, they're just one of a bunch. I have a lot of friends that are canceling their Netflix because there's just nothing left to watch on there anymore. They're not as interested. I'm not willing to pay $15 a month for one app when there's so many other apps out there, right? You buy Disney Plus, you get Disney Plus and ESPN Plus and Hulu. I mean, that's a pretty good deal. So not big on Netflix from a fundamental standpoint unless they can start to add other kinds of revenue streams to their company, other products, other services. So really need to see them evolve there. But from a technical standpoint, they're also just chopping sideways, so I'm pretty neutral there. There's not a whole lot I can take from this chart. I don't know what to say of this chart other than there's no trade to be had here. I mean, you can see that they are chopping up and down, so you could try to play this channel. You could try to play this support right here. If they come down to this support, you could try to go long on it, thinking that they're going to bounce off this support. Or you could short the stock if you think they're approaching this resistance level right here and you think they're going to bounce off it and come back down. I mean, you can do stuff like that. But I'm just not a fan of this company. I'm just going to stay away from it in general. Okay, that's what I got for Netflix. Let's move on to Google. Okay, so we've got Google here. This is a pretty long-term chart right here, going all the way back into the middle of 2019. So let's zoom in a little bit. You can see after we zoom in a little bit that we have been chopping sideways on Google for some time now. They had a great earnings report, I believe, right there it is, right there, on 29 October, and they shot to the upside because their revenues were picking back up. But since then, we've kind of just chopped sideways, and not perfectly sideways, but we are creating somewhat of a channel right here that we've been consolidating in after this huge run up. I mean, we had these September lows in the $1,400 range, and we've been just kind of chopping up. And then we dipped pretty hard, hit that earnings call, loved the earnings call, shot straight up. And we've been kind of consolidating since then. So I think the trend is up on this one, just because we would be continuing that bull trend from before, right? We have this bull trend going up into the channel, and now we're chopping sideways, consolidating. The buyers and sellers are consolidating, and I think eventually the trend should be back up after we see a breakout above this resistance. And that's, you know, been the same case for a lot of these big tech stocks. I know I've been saying the same thing over and over, but that's the reason I made this video, because I think a lot of these stocks are pretty similar from a technical analysis standpoint. We had big bull trends in 2020. We're in consolidation phases now on a lot of them in the end of 2020 and going into 2021. And I think we will eventually see breakouts above the resistance on a lot of these. Okay, so there's no guarantee, but when you have consolidation phases after a bull run, you tend to see an eventual bull run breakout above that consolidation phase. Okay, so that's what I've got for Google. I think we will eventually break out to the upside, but we need to break above this resistance line first. Okay, so to sum up the entire video, I am bearish on Facebook, bullish on Apple, neutral on Microsoft for the short term, but bullish on Microsoft medium to long term, neutral on Tesla for the short to medium term, but bullish long term, bullish on Amazon, neutral on Netflix from a technical standpoint, but I don't really care much for the product unless they can expand into more revenue streams, and neutral on Google short term, but bullish long term. If you enjoy chart pattern analysis, be sure to check out the other videos on my channel. Hit the like and subscribe buttons down below if you haven't yet. I'll see you guys in the comments down below and in the next video. Thanks everyone.